Hey everybody, Brian from Bear Bull Traders here. It is the weekend, January the 19th, and I hope everyone is having a good weekend. This, of course, is the weekend video. We will take a look at what happened last week in the markets, had a bit of a comeback, and then we'll take a look ahead. We've got a shortened trading week coming up with Martin Luther King holiday and, of course, the inauguration that'll happen on the same day. So it's going to be an interesting week. So let's get down to it. All right, so as always, let's get started and take a look at what happened last week. Let's do a quick review here. We had PPI and CPI data that came out on Tuesday and Wednesday. Pretty much what was reported was in line or even maybe slightly lower than some had expected. So that certainly gave some optimism to investors and traders that the Fed could start moving to more rate cuts later this year. However, inflation still remains pretty high, much above the Fed's target rate of 2%. And the economy is still appearing to be strong. And we got some very strong bank earnings this week. So I'm not sure that the Fed's going to be in any hurry to cut rates with the economy the way it is. But you can see how the indexes finished on the week. Very strong. Dow up almost 4% there, and Q's up almost 3%, SPY. And the IWM did the best with interest rates dropping a bit on those positive CPI and PPI data. Financial and basic materials, sectors that were up the most. Healthcare, only sector that really is in the red, and we'll see what happens with that. I think there's a lot of trepidation about what healthcare may look like under the new administration or that industry. Again, the 2-year with the good numbers on PPI and CPI, the 2-year was down a little bit. The 10-year was down a little bit, but still above that sort of 4.5% level that people are watching. Dollar was down slightly on the lower interest rates, which is not unexpected. And Bitcoin really ripped this weekend, back over 100,000. At last I looked, it was trading around 104, but that may be different now. So up significantly from last week where it was just under 95,000. And that was your week in review. And this is a point where I take a quick break here just to peddle my books here that are available on Amazon. How to Swing Trade, Profiting as an Active Trader, both swing trade books and using a lot of the strategies that I use when you see some of my swing trades that I look at and take. And of course, the How to Trade Options book, which is the latest one, basically soup to nuts with strategies on how to trade options. And if you're a good trader already, you can probably even look at using options to enhance your profitability. So there's your books, and they're available on Amazon. So let's move on and take a look at some indexes. Okay, so let's start out. We're looking at some indexes here, and as always, we're going to start out with the bond market because it's much bigger than the stock market and has a tendency to move things around. So you can see here we've been on a pretty significant downtrend on the price of bonds, these longer term bonds, but we do seem to be breaking a bit of a downtrend here. And if you look at this more shorter term downtrend line, we actually have broken it. And if there's a lot of tariffs that get thrown on there, watch for this bond prices to continue to move back up here. It's kind of counterintuitive, but yields may start to drop a little bit more if we get some big tariffs happening, and that's what might happen. So we keep an eye on that with the tariff situation that's going to possibly come into effect on Tuesday with some signing of executive orders. You can see the dollar here pretty much chopping along. The dollar should still remain strong, still the best house on the block. And the QQQs, let's take a look at these indexes here. You can see this downtrend line that I haven't drawn in, but there's a downtrend line here. You can see we've broken above it on Friday with those some good numbers. And watch for it to move higher now that we've broken this downtrend line. It's kind of been in a bit of a channel since we broke down through the moving average years, but now we've moved above these moving averages and we are looking like we're breaking out here on this downtrend line. So maybe an ABCD pattern. Same with the SPY. You can see here we've kind of broken out of this this wedge that's been sloping down. So watch for continuation there as well. And the Dow, sort of same, don't want to keep repeating myself here, but still looking fairly positive. And same with the IWM, although we are at a area that's been prior resistance back here, right here, right here, and we're right back at that level again. So watch the IWM again. If yields start to drop, watch for the IWM to continue to have strength here. And Bitcoin, here we are right around 104,435 right now on Bitcoin. So, and actually this number here is 103,300. So I guess maybe it's down and the chart isn't reflecting that. So that's where we are on the indexes. Okay, so let's look at some of the positions I am in right now. X, I've been in for a couple weeks. And when it really bottomed out here, when that deal fell through, and I jumped in because I knew it was oversold. And I've actually taken some profits over the last week when it jumped up here, and still holding some, but really nice move on that swing trade. Love those oversold trades where you can jump in and get a real deal. And here's another one, KMI, Kinder Morgan. I've been involved with this for a couple weeks. Took some profits already because it's really just been ripping higher here. The only concern I have with KMI is it is reporting on Wednesday, so I'm probably going to take more off before that report, and so that I'm locked in a significant amount of profits just in case it gets sold off after the earnings report. And speaking of selling off after an earnings report, unfortunately, I got caught here with TD. I held through an earnings report and paid the price. So what I've been doing is, if you've been watching my videos, I've been selling calls against the position to collect premium, and it's worked quite well. And thank goodness I didn't do it last week, because something happened here, and TD, I believe there was an upgrade, something like that, and TD just monster move on Friday. I did sell some as we got up through 57, and really well into the money, back in the money again here on this trade. So you know, I kind of knew that I was going to stick with this for a longer term, just because TD is TD and it's not going anywhere. And it just got back way above my break even much sooner than I anticipated, thanks to this big move on Friday. So quite happy with that. And I'm still going to hold on to some, but like I said, it turned out to be a decent trade after all. All right, so let's take a look at what I'm watching for next week. Again, it's going to be a volatile week, and there's going to be a lot of executive orders signed, and there should be a lot of volatility as a result. So we'll just keep our powder dry for the first day or so, Tuesday. But it's going to be an interesting open when we get there. But I've been looking at staples. Just was looking at staples over the weekend. You can see here we've had. Back in June, July, we had a double bottom right down around this 76 level, and we've come down here and touched it again. So I'm kind of looking at this thinking maybe Staples is getting ready to make a bit of a comeback here. You definitely have an area where you can use as a stop, 76, and could be good for a potential run back up here. And if you look at one of the big components of XLP, the Staples ETF, it is Costco. And Costco looks kind of interesting for a bounce play here. We've put in what I would call a double bottom. So we've had a bottom here and maybe a bottom, or possibly I could call this a higher low. Regardless, we have broken trend. Here's your trend line here. We broke through it. We came sort of checked back to it and then bounced off it. And Costco had a good day on Friday with the rest of the market, but it looks like it's ready to move back up again. And of course, that will help XLP as well. So Costco looking interesting. Might be a good options play if you want to check out my options book on how to play more expensive stocks. You could buy a call, maybe sell another call above it just to reduce the price of that position, or you could sell a put and buy a put below it to protect your position. So a number of ways to play this other than just buying the stock, because it is quite expensive. Another possible trade this week is in the mid caps. Mid caps probably are going to be looking the best in terms of comeback recoveries in terms of stock prices. Mid caps tend to be more profitable than the small caps, and certainly will benefit from lower interest rate environment, which might happen if a lot of tariffs are put on. So just watch the yield curve and watch IWR. There's a number of ETFs that you can play with for the mid caps. This is just one I found that was a reasonable price. And Tesla's always seems to be popping up here. Could be interesting to see what happens this week with Tesla. You can see here we're back up to an area where there's been prior resistance, and we tried to get above it on Friday and pull back. So not particularly good price action on Tesla given the type of Friday we did have. So still above these moving averages, but watch Tesla next week and see what kind of notoriety Elon Musk gets at the inauguration, or if it's downplayed. There is some concern that some of these EV rebates and incentives may be dropped in the new administration. So I'm not sure how that's probably going to impact Tesla, but maybe he'll get a pass on it. I don't know. Anyway, that's what I'm watching for next week. Okay, so let's wrap things up here for the week of January 20th. And it is going to be an exciting week for sure. There should be some volatility in the market. And here's your levels on the four indexes here. And also some of the economic events that are coming up this week. Of course, Monday is a holiday. Markets will be closed. We've got the holiday plus the inauguration. And following the inauguration, there's going to be a whole lot of executive orders signed. So that may move the markets around quite a bit, as I've already mentioned. So watch out for that. Got U.S. economic indicators on Wednesday, jobless claims as usual on Thursday, and some PMI numbers Friday. And as far as earnings go, we are starting into earnings season here. So a big one will be Netflix. If you want to join us on YouTube Live, we will be covering that live on YouTube on the Bearable channel. So if you want to come and join us for that. And of course, we've got some healthcare stocks and some energy stocks, some rail stocks. So it's going to be a very interesting week for earnings as well. So that's it, everybody. Again, Monday holiday, don't come looking for us, but on Tuesday we will be live on YouTube as well as for our members trading the open. So hopefully you can join us there. We'll hopefully see you Tuesday morning. Take care. Bye.